All right, good morning, everybody. It is Cowboy, and it is 8:30 a.m. EST, and we're live. We're live. We're live. All right. So let me grab some charts. Let's jump right into it. And I think we had some economic data that also came out today. So let me bring that up first, actually. Sharing the screen. So remember, I always take a look at the economic data before I trade, right? Because especially as a Forex trader, but as any kind of trader, economic data can make things move differently than what the charts could say, right? There are a couple of different kinds of traders out there. There are fundamental traders who tend to be more like investors. For the most part, you have some crossover there from technical to fundamental in trading and investing both. There's a little bit of a difference between the two. And then you have technical traders such as myself who basically take a look at all the squiggly lines on the charts, and we use that data to predict where price might go. And then we take out our profits. We say, okay, I think according to my mathematics, according to what I see on the screen, according to these indicators and this price action, what the candles are saying, so on and so forth, price is probably going to go up. We take a measured approach, take a little bit of money out, and then we're good to go, right? So this data you see on the screen, that can throw things off. See here, this CPI for Canada just came out right now, like about 2-3 minutes ago. So if you look at the Canadian dollar screen, we're going to see probably some notable movement in price. So let's go ahead and just take a peek at that here. Give me one moment. Okay, so USD CAD. So again, we're just looking at the Forex markets for the moment, and that is pretty notable. That is a big move. Okay, so let me go to the lower time frame here. So this is a really good example of why you want to look at the economic data. This is a huge move in the Canadian dollar. And that's remarkable. That might have even affected other markets besides the Canadian dollar market. So the economic data is going to be around a certain currency. You can see here it's CAD with a red envelope next to it, CPI, all the different CPI numbers. And CPI is consumer price inflation, and that is an inflation metric. And inflation is the big thing right now. It's the big ticket. So monetary policy is going to be shifted based on inflation, and monetary policy and fiscal policy, all that stuff is going to affect the price of everything because it means that money is going to be cheaper or more expensive or in greater or less supply. So it appears here that I would say that inflation came in hot for that. Let's take a look at the actual data. Oh, here it is. Yeah, came in hot, higher than expected by a lot. So Canadian CPI came in 0.6 as opposed to what they thought it was going to be 0.3. Their median CPI came in a little higher than expected, and so did the trimmed. But their main CPI month over month came out twice as high as it was expected to be. So that really did cause basically the wisdom is that the Canadian dollar will not have an interest rate cut next month or the next time they cut might be this month, whatever it is. I think they just cut a couple weeks ago. So whatever their cut schedule is, their rate or not, their cut or not or hike, whatever their interest rate adjustment schedule is, when this number is high, when inflation is high, that's telling the market that they're probably going to have to when inflation is high, they're going to probably have to hold interest rates higher for longer to tame inflation. And when interest rates are higher, that means that money will stay more expensive. And money is debt at this point. 100% of money, fiat money, is going to be debt. So that is used to finance markets. And when that gets expensive, that means that markets will be less financed, and less money will go into markets, and therefore prices will probably go down on items because in this case, the Canadian dollar will go up. And we see that right here in the charts where against the US dollar, the Canadian dollar went up. Let's see it here. If we look at this pair, it's USD. Fix that. It's USD CAD, right? So because the CAD comes second in this pair, the USD versus the CAD. This on the right, this column is the dollar measured in Canadian dollars, right? So in this case, CAD went up, so the chart's going to go down because CAD is in the second part of the pair. CAD went up, chart's going to go down. Now, if this was an inverted chart, if this was the CAD versus the USD, then this would have gone up, but that's not usually how it's traded. So that's why we see this big move in the price. Now, if this were dollar news and the dollar got stronger instead, then obviously this chart would go up and most assets would go down in price. But this was a significant move in the Canadian dollar. This data just came out, and this is why I usually don't trade until the data has come out. Now, I might take advantage of the volatility just after the data came out. That's one way to make a buck in this game, right? But until then, I tend to be a bit more conservative than a lot of your traders who try to kind of gamble and make money on the news. Now, there are ways to try to make money on the news, and it's not what I'm going to talk about today. I do have a methodology of kind of taking a measured move, if you will, and there is a way to gamble into the news a little bit. I'm still testing the success rate of that, though. It's not an easy thing to test and measure. News is very unpredictable, but for the most part, I just don't do that. So let's go ahead and take a look at what other news comes out today. For the US dollar, we have consumer confidence right here. So that's going to be important. If consumer confidence is high, then that's going to be sort of an indication that the interest rates have to remain high for longer. That would make the dollar more expensive, and that would, on any dollar chart, whatever side the dollar is relative to, would push the dollar up. So if it's, something like in the chart here, if it's like the GBP USD, right? Well, what that means in this particular chart, GBP USD, is that this chart would actually, if the dollar got strong, this chart would go down because the pair is GBP USD, right? USD being second in the pair. If the dollar got stronger, this chart would simply go down. Okay, so that's how that works. Now, most things are traded with USD as the second part of the pair. I mean, the entire stock market is traded that way. It's going to be, for in this case, it would be Apple USD. That's how it works. So if the dollar got stronger, then Apple technically would want to go down. It doesn't always do that, but it nearly always does that. Now, that move might be temporary if it's just a small increase, or at least, if the dollar was perceived to get just a little bit stronger than expected. For example, the forecast consumer confidence is at 100%. So let's just say it come in at 100%, 105%, higher than expected. That means dollar strong. That means a lot of things would go down. But if it came in at 150%, which is just out of this world and probably would never happen, I don't think we see numbers like that. But if we did, then a lot of stocks probably would take a very decent hit, at least in the short term. So it's all about the expected number, and that's how the economic news is handled. Take a quick look at Bitcoin before we move over to the private live lab. Okay, here we are. Now, a lot of people were concerned that Bitcoin would dip a lot lower, and I did say yesterday on the live lab that Bitcoin could dip down to about 59,000. I put a yellow line at that number. As a matter of fact, it might have done that in our private live lab as opposed to our public one. And sure enough, price did make its way down to 59,000. Now it has bounced back up. It is now back inside of this months long consolidation. And a lot of people thought price would go down to this post having low of 56,000 way down here. It did not do that. And there was liquidity down there. You can see that yellow box. We got liquidity off of the kingfisher.io. So price never made its way down there. And I did say that it's quite possible it will not. A lot of people were scared. Now it could still. It might fake us out. It has bounced back into this consolidation area. And once it does get back into this large rectangle, it's going to want to tend to stay there, right? However, that's the most likely thing at this point is the price might at least stay here for a while and make a decision up or down, right? However, there's always that chance that it does grab liquidity and head down. And the best way to do that is to grab liquidity off the Kingfisher and then take a look at the algos and see which way that's going to go. And because we are about to head over to the private live lab, I'm probably going to save that information for that time. So let's go ahead and do that. Give me just a moment here. Okay. AlgoFactory.tech. Come on over. You see on the screen there is a QR code, and you can just go ahead and zap that. It'll take you over to our website. And what we do is we help people learn how to trade. All those lines and things you see on the charts, a lot of people see that and they get intimidated, and that is not the way to be. This kind of stuff is not that complex, right? You learn it a bit by bit as anything else. When you started out in any subject in school, you started at the beginning and you moved forward. And if you have even high school math, this is all very attainable. So don't let it intimidate you. If you want to have a chance at being able to extract money from these markets on a regular basis, right? If you want to have the chance to be able to predict where price is going to go, to use the tools that we use, and then be able to pull small amounts or larger amounts of money out, say on a daily, a weekly, or a monthly basis, then we give you the opportunity to build your own system that does that, right? We're not going to just sell you, hey, here's my system, and then like, good luck. We're actually going to help you build your own. And there is a lot of very important implications there. So I can tell you right now, I could give you my system, which is a good system, and you'll probably fail. Almost everybody will, because you don't understand how to treat trading as a business and you don't have your trading psychology down. And it's not your system. When you build your own system, that's what's going to sort of buttress you. Your trading psychology is going to hold you up when you go through the drawdowns. And every really good system, the best systems in the world, have drawdowns. So you're going to want to build your own system. That's kind of the big secret, actually. I've done a couple of videos called The Big Secret in Trading, and that's what it is. You want to build your own system because you will hold up better over time trading that. I mean, like, I would say almost 100% of the time it's going to be like that. So I do appreciate everybody being on here. We're going to see you over, hopefully, at algofactory.tech. I'm going to jump into the private live lab. But don't forget, algofactory.tech.
Join us or die.